Durham just released their Q4 earnings as well as they announced an acquisition that they're making. So these are two things that we're going to talk about in today's video. Guys, welcome back to the Fire Grind. My name is Daniel, and in this channel, we talk about personal finance and stock market investing. And today, this is my second time filming this video because the first time I filmed it, all the footage got erased. So, I really put in the effort to do these things for you. Right now, it's like 10:53. So if you wouldn't mind just smashing that thumbs up button so I can get this to you as quickly as possible, that would be greatly appreciated. Anyways, let's jump right into it because it's getting late and let's just get to it. So first off, Durham, what their business is, you should know this before you consider investing in them. So let's go over this. So Durham is a leading provider of cloud-based software and technology solutions designed to improve efficiency and increase productivity for legal and business professionals. The company provides critical information services and workflow which clients use to manage their process, information, and regulatory requirements. Durham's products provide automated public record due diligence searches, associated document preparation, and electronic public filings related to legal due diligence, corporate formation and maintenance, lien registration, litigation, and real estate conveyancing. So that is a mouthful right there. But essentially, they operate in the real estate space, the government space, as well as the finance space. So in the finance space, it's things with like mortgages and stuff like that. Real estate space is just all the legal documents behind transferring of ownership and all the background checks you do on people. And government, I guess, is just general document searching on people and their records in the past, maybe with tax and stuff like that. So essentially, Durham, their services help businesses to automate the searching of documents as well as generating some of these documents themselves. And typically in the past, what this might look like is you're going down to some sort of public record facility where they house all the records for people who maybe own a house, for example, and you have to search through maybe filing cabinets of files to find your client's files. But now a lot of this can be accessed online. Doing it online, though, you still have to enter in some sort of search parameters and go to the right database. But Durham just kind of removes it one step further such that you can enter something into their database and they go out into multiple databases and search for it. And it also might handle other things like updating documents with new owners for houses, for example, and stuff like that. So this is what Durham's business is, and that's how they essentially make money by saving law firms and real estate agents time. So essentially how they make their revenue, we'll go into this next. They earn the majority of their revenue on a recurring transactional fee basis. So they do this as clients perform automated public record due diligence searches, associated document preparation, and electronic public records filings through the company's platform. So essentially it's each search or sort of document transfer, they earn a fee for that. And they maybe also charge a base fee. But the majority of the revenue is from each individual transaction of a search or a document transfer. And right now with COVID, they saw a bit of a revenue hit if we go into their quarterly earnings, which I'll pull up right here. So the 12 months and the 3 months ended June 30th, they earned $14 million for the quarter and $65.5 million for the year. And for the quarter, this represents a 6% decrease. But for the year, this is a 49% increase. So the main reason for increase in revenue for the year is due to the number of acquisitions that they made throughout the year. And when the company acquires other companies, those new companies now are part of Durham and they contribute to the revenue that Durham earns. So ultimately, the revenue went up due to acquisition. They saw some seasonality though in their revenue, and ultimately in the previous quarter, they saw a decline because of COVID. And when you think about it, especially in Canada or even the States, the real estate market was a lot slower in these months. Not many people wanted to sell during these months and not many people were looking to buy. And if their business is based off the number of people making real estate transactions, which force lawyers to do searches, then they are probably not seeing as many transactions happening during this time. And ultimately, they had a decline in revenue of around 6%. And a 6% decline in revenue for the quarter compared to previous Q4 of 2019 is actually not bad. When you think about this, many companies had a decline of anywhere from 20 to 30 or even 40% decline in revenue, especially those in retail. So a 6% decline is not terrible. And now that, lockdowns have stopped happening, or governments are just taking those restrictions away, the real estate market here in Canada is actually booming. So I expect the revenue to pick up. And Dye & Durham gave guidance also for 2021 Q1 that their revenue was going to be between $20 and $21 million. So this is an uptick from the previous quarter as well. If we look at more detail at the income statement, we can also see some of the costs and how they have changed quarter over quarter. So you see one of the major costs there is the financing costs. It went from around $2.9 million all the way to $5 million. And that's a big increase for finance costs. And this is due to the increase in borrowing and higher loans during this period. However, going forward from here, they shouldn't see these higher loans because they did raise $172 million during the RPO, and this should be enough to finance them for the next 12 months. They also had an increase in acquisition, restructuring, and other costs, which increased by $1 million for this quarter and $2.6 million for the year. But let's focus on this quarter where it increased by $1 million. And the reason why it increased by $1 million is mainly due to the one-time cost of their IPO. So going forward, they shouldn't see that much of an increase in their acquisition, restructuring, and other costs. Another thing that Dye & Durham did over this period was that they also reduced their costs by $4.1 million, which is very notable here. If we take a look at the total expenses, it sits somewhere around $18 million. So if they managed to decrease it by $4.1 million, then that's almost a 25 to 30% decrease. One last thing that I want to look at is their contractual debt. So right now they have $31.7 million in short-term liabilities, which is their contractual debt. However, going forward for the next 3 years, that drops significantly down to $8 million per year. So it's only this year they have a large contractual debt, and then they have 3 years of sort of smooth sailing where they don't have that much debt to repay. And take into account also their current assets right now aren't doing so hot on the balance sheet if we look at it right here. However, the balance sheet states they have $18 million, which is not enough to cover this 31. They do have their IPO money, which is not accounted for in this balance sheet. Because this balance sheet is for June 30th, but their IPO, they raised $172 million after they had an overbought sort of round there. So originally they were supposed to go for 150, however they ended up closing 172.5. So they are very well funded right now, and they're going to easily be able to pay back the $31.7 million that they owe for the next year. Now let's move on to the acquisition that they had, as well as they also announced a secondary offering. So Dye & Durham, they acquired a company called Property Information Exchange, and they paid a total of $52.9 million. And this is a UK competitor that they have, and now they bought them out and brought them in-house, and they're going to have some more product synergy between the two companies, which will ultimately make each company more efficient. So they probably paid a premium to buy this company out, as most acquisitions are like that. However, they are going to be able to make Property Information Exchange more profitable than they are currently, because they're able to cut out things like redundant HR people or redundant facilities people, or just even redundant coders and stuff like that. So they're able to cut down the amount of workforce to support Property Information Exchange's developments. And when they cut down the number of workers and they still sell stuff for the same price, they become ultimately a more profitable company. And the same goes for the Dye & Durham company, because they maybe have better financing in UK. So maybe they take those people from UK and put them into Dye & Durham, and maybe let go of some of their people. But maybe over here in Canada, they have better HR and facilities people. So these are some sort of cross-pollinations that these two companies can have together and ultimately make a more profitable business as a whole. Also with this deal, Dye & Durham has announced that they're raising $50 million. And yes, it's kind of weird that they're raising another $50 million just a couple months after the IPO, where they raised $172 million. So it's not like they needed the cash. However, if you look at the stock price of Dye & Durham, it's shot up from $7.50 when they first IPO'd. So actually retail investors didn't get to see that because that was institutional investors. But as a retail investor, you saw it at $14 on the first day. And today it's sitting at around $21. But a couple of weeks ago, it was around $27, $28, or even $29 per share. So as a management team, it does make sense for them to announce another raise, because within the span of 3 months or so, the stock has tripled in value. So of course you want to capitalize on this and sell off shares for $21 per share, because basically overnight, without you doing too much, the company tripled in value. So who knows when the next opportunity like this will happen. So they decided to raise this $50 million to cover up the acquisition of this new company. So to me, it makes sense. And as shareholders, It does suck if you bought up in the $21 range or higher, because now the stock has come back down to $21 per share, just probably because they offered their shares to the underwriters for $21 per share. And we saw this also happen with Docebo, where Docebo was trading at $57, and when they announced a secondary offering, their shares instantly dropped to the price that they were offering the shares at, which is $50. And even today, they dropped even further to $41, but that's probably mostly due to market trends. So personally, here's a quick tip if you're interested in Docebo. I personally would open up a position here. And right now, $41 is actually under my cost basis of $44. So I'm looking to average in right now. Anyways, back to Dye & Durham. So for Dye & Durham, I think right now at $21, me personally going forward, I don't plan to add to my position just right now because there's other stocks that I want to buy. But at $21, it is a good place to average in. My personal cost basis is $17 per share. So $21 isn't that great of a steal compared to my cost basis. So maybe I'll wait out for more market volatility and maybe I'll drop to like $19 or $18, which is probably where I'll start consider adding to my position. This company though is only a $1 billion company, so it's still a very small cap. And I think they have a lot of potential going forward, whether that's them moving forward as a company and expanding and acquiring more companies, or maybe they're going to be swallowed up by a larger fish and see some sort of skyrocket in their valuation upon the announcement of their acquisition. I haven't dug too much into property information exchange, but I do think that right now with the whole work from home era, a lot of the legal software out there is going to be booming because a lot of the people working in the legal world are able to work at home, and software is very important, as well as cloud software is even more important because it's easy to log on to. So I think right now, because people aren't able to go to the office, maybe they don't have access to documents, and there's a bunch of team integrations and work sharing that can happen on the Dye & Durham platform, which makes it all the more interesting or all the more enticing for law firms and financial firms, as well as governments to purchase. Anyways, those are my thoughts on Dye & Durham. If you enjoyed this video, please smash that thumbs up button. Also, subscribe to my channel as I will be doing a Wealthsimple trade portfolio update. And this should happen over the weekend or even on Monday latest. And I'll show you all the stocks that I've been buying. And I've also put $1,000 into this account, so I may discuss what I'm planning to do with this $1,000 going forward. But for the most part, you should know my thoughts in my previous videos, as I've shared with you which stocks I'm looking to buy. So check out that video if you're interested. I'll link it up right here. Anyways, this video is getting a little bit long and I really need to edit right now. So I'm gonna head out right now, edit that video, and get it to you guys as soon as possible. Keep up the grind and have a great day.